Hi everyone. Good afternoon, good evening. So, this is going to just be a short review of how literally I look at price and how I've been back testing and forward testing. So, today was literally a choppy day. These are not live trades, these are paper trades. So, this is not financial advice. As ICT explains, go over to the YouTube channel of ICT and learn how you come up with this logic. You learn what it teaches and then you come up with your own what? Model. Okay? So going into price today, price was literally choppy. I didn't understand what was happening. So today, this is what I was step reading as of today. During London session, there was this trade opportunity after London session. I entered here. I was anticipating it to take hit TP, but it reversed. I moved my stop loss to break even. So because I was anticipating it to fall based on the higher time frame, I sold more here and I closed the charts as I was traveling because I'm doing some work. So I'm unable to trade uh, full time. So at this point in time, I was not on the charts, but I think I would have caught along based on my logic. Now, moving over to 9:30, because when you look at 9:30, so maybe let me just show you our current trade as I'm going to explain. So this is our current running trade. 9:30, let me see what I traded today. So I came at the charts at around, I was not around at 9:30. The first presented fair value gap was at around here. I can just put it here on the charts. It gives me directions on how the market wants to behave. That's the presented fair value gap. So I was not at the charts. When I returned on the charts, I was reached at this point. I saw this key level, the previous weekly high. We are literally at the previous weekly high. So I knew that we were going to take out this sell side. Then I immediately switched off my mind, like, no, we are at a key level. Every time we're at a key level, we see this consolidation. A lot of this consolidation happens at a key level before we actually buy. So our trade is currently running properly. The sales were in. So every time when you journal price, you will see a lot of this consolidation around the key levels. As many people call it choppy session. Smart money is actually accumulating long positions. If you study your price action at this week, I told you to always label your previous weekly high. Let me remove my take profit so that you can see this level I'm talking about. I want to make it a little bit thicker. If you study your price action, okay, and I told you to always label this previous weekly high, previous daily high, previous monthly high, previous uh, weekly, monthly, and yearly highs. You have to know wherever you are in the range. There's an indicator that can help you. I'm going to show it to you just in a minute. So reaching this point, I was traveling. Then I reached at around 10. I'm like, okay, we are at 10:20. Price will start moving around 10:30. So I anticipated that this gonna sell and take out this level, then we buy. However, I was wrong. With my own logic, which I have backtested and I found it true that every time we are at a key level, price action drops. Hmm? This is when the first time price reaches the key level. The first candle that reaches the key level is always taken out, as we see it was taken out. From this point onwards, if price is interested in going a little bit down, look for NF. You want to see it displaced with the fair value gap. But notice that when price reached here, it did not even move. There is no fair value gap created as left this previous weekly high. This gives us anticipation that we are going likely to take out the short-term high that is like, because in retail traders they are always chasing price. They believe it's gonna keep dropping. It's gonna keep, because it has been dropping from market open. So that is why we had this chop here. As retailers kept selling, smart money was accumulating long positions. And when they are accumulating these long positions, they want the damn money to take on their trades. So what happened is that I sold here. Then I was not thinking because I was in a taxi and I was traveling. So, uh, when I sold here, I exited, knowing that I was on the wrong side of the market because I wanted it to long this market. And then when I longed here, I realized that I was going to be taken up. Now, the rules to trading this type of price action is that at a previous weekly high, at a previous daily high, and a previous monthly high, if you don't buy at the level, this is what I mean. You want to be a buyer when price is dropping, okay, retailers will be scared to buy this market. You want to be a buyer without any confirmation, okay? If you know where money is, because retailers have moved their stop loss here, the ones that have been chasing price. You only want to buy when either, and it is only safe, the lowest low which is greater than your stop loss to be put in. And you only and only want to buy at the key level or below the key level. You do not want, hmm, you do not want to buy, you don't want to buy above the key level because here price is in premium. Below is pricing is in discount. So ICT tells us to buy when we're in discount. So below the key level is discount price. Above is the premium, just like you see. Now, when price reaches these levels, what am I interested in that I'm monitoring? I'm monitoring the fair value gaps that are put in. Price leaves this previous weekly high. You see, this is the fair value gap after the key level. Like this price action was so important. But I was not at the charts. So if I was at the charts and I see price leave this key level with a fair value gap, I would wait for price to drop. And I will buy when price is dropping. That is what ICT tells us. Because if you buy when price is bullish, your risk is high. You're exposing yourself to a lot of risk. So you buy when price is dropping, as it is dropping. That is institutional order flow entry drill. And this one comes with practice, which I am doing with Dizzy trades. Don't live trade until you learn completely. Now, here you're supposed to be a buyer. Smart money is accumulating long position, but I'm going to give you logical rules to follow. You buy at the key level. If you don't buy at the key level, you wait for time. Now, there are specific times when price moves. 950 macro during the macro price moves, like you see 950 macro. At 10, you will chop around, but 10:30 price will move and then 11:30. So 10:30 most times price moves at 11:30. Okay. So for this one is now let's continue. So now I bought here. No, I bought here. This kind of took me out. It took me out because my stop loss was just, and I was chasing price. So this was wrong. I should not do this again, not chase price when it is at a previous weekly high. So I bought here and I held this trade, but if you look at the time, it was 10:38. And I told you either buy at the key level or below. So because I was scared, I was supposed to buy when this one was broken, okay? When it was still bearish. So I bought here. Price moved in my favor. It chopped around. As the retailers are saying, what a choppy session. Price comes back again. It took me out because now this was it. True. Remember the rules I have just told you that when you're at a key level like previous weekly high, you want to buy below or you want to buy at the key level. Now, if you don't want, you want extra confirmation, I'm going to give you specific rules and you go and back test it just and you see that the things actually did. Wait for price to reach the previous weekly high like this one here. Okay. And you start to count short-term lows. Remember, a low, short-term highs, has two opposite lower lows, that's a short-term high. Now, if this is our first short-term high, this is our first short-term high. Okay? You want this short-term high to be broken, okay? Do you have another short-term high up here? No. Once this short-term high is broken, okay? Then we need to see another short-term high be put in. Now, you have to note this and put it in your books as you're going to see it appear even in this trade. Once this short-term, the first short-term high is created after we have hit the key level and we have taken out a short-term high, we will wait for the second short-term high. Okay. Now, this is where you have to wait. Okay, patience. Because if you're patient, you will literally get these trends. Okay. Now, I'm gonna move this back to come. I'll explain it later. So, this short-term high, the first short-term high, second short-term, count two of them. You want to be a buyer when price breaks the second short-term high. After, okay, when price breaks the short-term high, it is going to run like like nothing. I'm looking for buy side here. This is where retailers that have been selling have failed their stop loss. Whoever has been sold, they put their stop loss above these all highs. Now, you want to be in a position once this short-term high is created, you wait for price to return to OTE. Best inversions. This one thing will always occur when price is where. But this one is a trade where I think we'll go break even. We took off partials here, and we left a runner. But looks like it's gonna take us a break, which is okay. When we take out the short-term high, you want to be the best inversions that you will ever have or get. Hmm? Is when these are things I have noticed in price. You can backtest them and come and tell me what you find out. The best inversions will always occur. Okay? You have probably have seen this on my charts level. The best inversions will always occur, hmm, after the short-term high is created. Now there are rules. When price it takes out the first short-term high after hitting the key level and puts in a short-term high. When we take out the short-term high without any displacement, you anticipate a deeper retracement into the OTE of the range. Now, in this case, we can even put our sniper entries at the previous weekly high or any key level below the midpoint. Now, those are rules you have to know and note them down. I told you, and this you want to buy at that key level near or below. So as price was dropping, I was buying. So I bought here, I bought here. Okay. Then here, I think I got so scared. Then closed my trades here. I got scared because I was seeing this kind of. Now here is where experience. So it shows that I don't have much experience. I need to work on it. Not getting scared because I see this bearish candle. These candles are good because they show you that we are taking out whoever wants to buy. Trapping more retailers because the price hit this scale, this FVG, it took me out. But also me, I bought earlier. Now me buying earlier, I should know that price will create a short-term high and another short-term high, and I have to be comfortable that once the short-term high, second short-term high is put in without any displacement, it will probably run until deeper retracement. So the best order blocks will always occur. Hmm? Best order blocks will always occur in this leg when price return after creating the second short-term high. You want to be a buyer. I bought here, I bought more here, and after we create this short-term high with displacement, this is the highest probability institutional order flow entry drill. After creating a short-term high, second short-term high will be taken out. This is the best institutional order flow entry drill you will ever get. You have to note down those rules because they will help you to avoid over trading and avoid hitting stop loss because you will wait for specific rules. Okay? I will make probably a future video explaining in detail. This is entry confirmation. Now, after that, I took my take profits at this buy side here because I was anticipating retailers have put their stop loss here. And I was expecting this price to drop at any time. And because the pre-session movement was extremely low, let me show you, extremely huge. With this here, we took out London buy side and look at this range, the drop. So this choppy slow session was expected in this session. That is how you're able to anticipate such sessions. Now, I took my other here. Now, when we took out buy side, now there are specific rules you have to have in mind that every time we take out buy side, the first swing point will be taken out in most cases. Backtest and see the first swing point. Now, when this first swing point is taken out, so this is actually where you take your profits. But me, I was satisfied with my money. Okay? This is not financial advice. Now, when we reached this buy side and we took out the second buy side, now this is where the magic happens. Okay, so this one's going to take us out at break even. So we sold here, took partials here, taken us out at break even, which is okay. We are here to learn, not here to chase money. Now, remember the rules I have just told you down here. I'm going to remove everything here and remove the executions. I'm going to show you the higher time frame. On the higher time frame, M15, okay, 1 hour. 1 hour, we see that we have this inversion here. If we are bearish, we broke through it. This inversion is supposed to hold price to go lower. We're not supposed to break above this inversion. If we close above this inversion, it will mean we are going for this highs. But if we stay below this inversion, then higher chances we are going to cross up to this new day of enemy. So that is the logic behind it. And we have a market structure shift. Even on the higher time frame, once we have a higher market structure shift, wait for the first short-term low, wait for the second short-term low, then it will retrace. So this short-term low will create another short-term low if we are still bearish. But let's go to the M15 time frame. On the M15 time frame, we'll see that price has it. When you follow market structure, high, low. When we broke this low, put in a short-term low and a second short-term low. Remember, I told you the best inversion should always occur in this leg that comes up when we get an inversion here. But we have this M15 inversion. Let me just note this M15 inversion, not this 1 hour inversion. This 1 hour inversion high and so price action is stuck between 1 hour inversion high and low. That is why we're having a choppy session. So I expect price to drop later on at any one point because literally price is failing to go higher. So when we go back to 1 minute time frame, now this trade I have just taken here, okay, I sold. I think I got a phone call and I didn't observe clearly what. So when I see this candle, I always call it restriction endonuclease candle because this candle takes out all people who have sold earlier. When it takes them out, we are coming to take them out again. This is more buy side. For me, I look for liquidity. If I'm not in this move, I don't want to chase it. Okay? I see this happen again. Take buy side. The first candle takes buy side is taken out. Have buy side again here, which I write as the clever can sell. But here is what we want to observe. I went to the 15 minutes time frame. 15 seconds chart. This is the logic behind this trade. Okay. Now on the 15 seconds chart, the same logic I told you. Where is our buy side liquidity? Our buy side liquidity is here. We want to wait for price action to take out the high that took out the buy side. And these were actually equal lows. On the 15 seconds chart, we had equal lows. This is the inversion after the key level or after buy side. So we have a 1 hour inversion high. Okay. The low is here. This is the other 1 hour inversion of average. So when we take out this buy side, now let us start counting the lows of market structure I'll just give you. These things are algorithmic. I see this ICT says short-term low. I want you to be very keen and listen to this video. Go onto your charts and label. So once it is high, low. Even this is a low. Okay, because it broke this high. Now, what did I tell you? That once we break a short-term low, okay, what do you wait for? So this is a short-term low has been broken. We create a short-term low. We count two short-term lows, okay? Now this is the first one. It's a short-term low. I'm bringing this one with a second short-term low. Now, the rules say that when you create a short-term low and we break it with a fair value gap, in most cases, we are going to what? Continue dropping, eh? But that is not all, okay? Sometimes we will not. And this is the 15 seconds chart. Of course, you cannot just put your stop loss by here and put a stop loss here on the 15 seconds chart. So you have to give room. So, and you follow the other rules that when a second short-term low, we'll, assuming if we went to a 1 minute time frame, okay, let us be consistent with our rules. Going on 1 minute, Now be with me. We have a short-term low and another short-term low. Short-term low, this short-term low. This break below the short-term low, there is no fair value gap. And I told you when there is no fair value gap, it will retrace and take out this low stuff here. On the 15-second chart, you're anticipating price to retrace. And price action is retracing, smart money is selling. Okay? So smart, because on 1 minute we don't have a fair value gap, this high will go. And when you see this rejection, then you can start to what? To start selling. Okay? So smart money will sell. So because of experience, you will learn to see these things. So I sold on this candle. You want to be a seller. When you want to divide this uh, from this point, from this low, this high, okay? The best sales will always be above this level, okay? So you want to be a seller as price climbs up here, but I wait for some extra confirmation because I'm still learning all this. Ideally, my first sell position was right here. Okay. So plus 7 was around here. And my first partial, I was targeting, there was a fair value gap here, and this liquidity, then I was leaving a runner. Okay? So this was the logic behind this trade. It's more clear on the 1 minute time frame. Now, we would not how we just fell short of this buy side and quoted negative equal highs. So price moves by engineering liquidity and taking out liquidity. So again, I'm waiting for this buy side to be taken, the high that is taking out the buy side to be taken at a key time. And notice this time, this is at 12. At 12, the market moves in a direction. Even at 12:30, what is 12? So you see 12:30. 12 it was sloping, 12:30 it is moving up, and then at 1 and also 1:30. Knowing time and price is so important. So if literally I was targeting, uh, let's say 3 hour minimum, I think I would be so profitable if I target 3 hour because these huge algorithmic targets, because I always want target like, I know we are going to drop today, but I don't know what time we will start the drop. Basically, I hope you get something from this video. Have any questions, you can leave it in the comment. But listen to the logic and the entry confirmations. Those things are repetitive and they are algorithmic. Okay, so that's it for the price action for today. I think I'll keep doing more of this when I finish some assignments. I'm doing some assignment, trading while having a full-time job is what we have to do until we are consistently profitable. We cannot escape this. And because you have a job, it shouldn't mean you should underperform in your job. You actually have to overperform in both. It should not mean that you underperform in trading. I have not taken a day or two or one when I have not looked at the charts, even in my busy schedule. So this is just to encourage you that when you show up, it will make sense. The first thing you should do, even before you even put on a trade, is go and the ICT 2022 mentorship. Now, I'm going to show you how you should study ICT 2022 mentorship because people tell you that go and study ICT 2022 mentorship and they do not tell you how. Okay? Now, in order for you to make meaning out of the ICT 2022 mentorship, let me just open something and I'll show you here. I'm going to show you something. So, for you to study ICT 2022 mentorship, this is my journal. Let me just see. First original version. What's this one? This is Word document. So this is just like You have to have a Word document. Now, this is my view. Okay, you can have your own view. So I'm calling this weak dimensions a Dr. Strange's perspective. Factor candles, market structure, and displacement. Now, the factor candles is what I've been talking about, the short-term highs and short-term lows. These are all things you shall observe in the market. So you have to have a Word document like this one, and you record all your observations when you're watching ICT 2022 mentorship. For me, I'm watching 2022 up to 2024, but I have finished 2022. Now, if you've never watched 2022, pause whatever you're doing. Don't trade. Make sure you have watched 2022 mentorship. It will give you a deeper understanding of price. So I introduced my book by saying in the chaos of the markets, true mastery comes not from chasing every move, but from understanding the hidden rhythms and timeless patterns that govern price. A journey I embarked on through the lens of ICT's mentorship bridging 2022 to 2024. So for me, I am looking at how can I bridge 2022 and 2024 and come up with a model that will give me a higher strike rate. Hmm? So now the things I talk about is that you always have the last 3 months, weeks, daily highs and lows on your chart. You want to have all the levels of the weekly marked, open, close, and high. These are observations. Every inversion of fair value gap that takes out liquidity, make sure to mark the fair value gap or inversion that caused the liquidity sweep. Also mark the highest point of liquidity that was taken out. This is our first signal that a potential reversal may occur. Now you will not understand these things, but when I show you how these things happen, you'll be amazed. And there's what we call tap and fly. When you price it, say this is like institutional order flow entry drill. We will say that. So you want to have a Word document and record all your observations. Now, blending 2024, 2022 mentorship. Now, this is what we call what is 2022 mentorship. Let's see where I started from. So this is the first video. Okay. ICT 2022 mentorship. This is his first chart. You want to not take his screenshots, okay? You want to wait for, go back in time. If you've not subscribed for TradingView, go and subscribe for TradingView so that you can go back in time. When the ICT is explaining a chart, go onto your charts, note ICT's charts, label what has labeled. This is like backtesting. It will help you. This is what I did on the time frame, whatever he's saying. Now, this is you record whatever you've understood. So ICT in the first episode was telling us analysis should be done on the daily chart based on the weekly chart, suggest the price is heading. Now he was teaching us bias. Okay. So these are my notes. You write and you annotate with your charts. Okay. With all your observations from different time frames. And then you note where you would have sold from. So you see buy side is taken, wait for a market structure shift. This is a short-term low has taken out, market structure shift, institutional order flow entered with sell. Target, internal range liquidity. You don't want to take screenshots of ICT's videos, no. Open trading, you go back in time 2022. I'm gonna show you how. Okay. So let's see the first lecture of ICT 2022 mentorship happened when the first video. Let me see ICT 2022 mentorship. This is 2022. I think it was January or Feb. Let's see. 2015. Now I'm going to show you how you're going to watch ICT. Let's check another episode so that I can have the date in my mind. Now, this was just episode 1. You want to do that for all episodes and you write, you journal. This will help you have a deeper understanding of price action. Watching ICT 2022 mentorship, go all and trade whichever style you want because you will understand how the market moves. So this was episode 7, bias. You write what you observe, okay? You put in the charts. Now, after you've done that, you want to print this, and this will be your guiding principle. You want to refer to this always. Okay. But you may not watch all that. Episode 9. That's enough for now. Now, this is what I want to show you now. When you go to trading view, you note that you go to daily and the executions. This is NQ. I'm gonna go to weekly, 1 week. So when ICT is teaching you 2022 mentorship, you don't just watch. No, you want to go to your chart. This is you look for 2022. Why is 2020? You see all this is 2022. I think when I say watching uh replay. So you want to come. Hmm? I think it starts the mentorship in either January because me I finished here in October. So whichever video he's talking about, hmm, like annotate here. You go back in time like that, go to the daily, observe what he's telling you, mark it out. Hmm? Mark out your daily, mark out your weekly, mark out, let me just play price and I see what ICT was telling us here. See where I got in. Okay. So you want to annotate this, go to your charts, 1 hour, whatever he's talking about, and for you putting it into your own language and you understand yourself much better. So you see how I looked at this. So here I think ICT was talking about jagged and smooth edges, eh, blending a lot of things. Buy side taken. Now we go to what institutional order flow entered here. Let's go to M15 and we see. So these are the screenshots you have seen in my charts based on what ICT was teaching us. Okay, these are things you want to be aware of, and it will help you to improve your memory of how you view price action. Okay, so you see how ICT was explaining a mitigation block, a breaker. Now you understand what is a breaker, what is a mitigation block. I think this was on either 1 minute or 2 minutes. Yeah, I think this is 1 minute here. So you don't just go and watch, eh? And then you say, okay, I finished 2020 mentorship. No, you have to put in the work. Eh? You have to understand what is a mitigation block, what is a breaker, according to how ICT tells us. So now these are things I will do. Daily order block law, you see how price hits a daily order block law. Double sweep of liquidity is a plus signature. So liquidity sweep, I know that which is swept. Now let us see if my algorithmic pattern I discovered is working. So wait for price to hit this. Now price puts in a short, this is a short-term high, short-term low. So we shall start counting 1, 2. Now when this short-term high is put in, price will, the break of the second short-term high, price will just go, scroll, not even come back. Now you have a breaker. Do you think price will go below the breaker? Have a mitigation block for adding more entries. Sellers who have gone short, now they are mitigating their positions to go long or exit their positions. So all this you note and you record. So I hope this shows you or helps you to study ICT 2022 mentorship. Whichever style you're trading, just go on and watch ICT 2022 mentorship. It will give you a deeper understanding. Whether you trade support and resistance, whether you trade what. So one of the things I have faced in my trading is that I moved my stop loss to break even in fear. And most times the price moves in my direction, but it just taken me away. But we don't chase price. So the price moves at around 12:30, then 12:50, and then 1. Yeah, so basically that's it for today. Good day.